Welcome, my name is Vishal Tekshanani. Today I'm joined by Will Colbert, Portfolio Manager at BKI Investment Company, which is a listed investment company, and we're going to talk about the February 2018 earnings season outlook. Welcome to the show, Will. How are you?
Yeah, very well, Vishal. Thanks for having us.
So, Will, earnings season can be an incredibly busy time of the year. As a dividend-oriented fund manager, how do you prepare for this period?
Yeah, you're right. It is a busy time, but you can allow yourself to get caught up in the noise when really it's a period to assess companies and look how they're tracking on a long-term view as well.
Yeah.
We're very much a long-term investor. Dividends are a big focus for us. So we go into into reporting season rather, with a good understanding of where we expect the dividends to come out and the earnings. But it's a useful time for us in terms of we get good access to management.
Yep.
We can look at some new businesses as well. But it is a busy time, but we've been doing this for a long time now, and we enjoy the process.
Okay, so let's get a topographical view of what you're expecting this time around. Where are you expecting earnings and dividends to increase, show steady growth, and go backwards perhaps?
We're expecting a pretty solid earnings season.
Okay.
As you know, 2017 was a good period for the markets. I think the Australian market was up 11 or 12% before you include franking credits, and that lagged the rest of the world, which was some of the offshore markets were very, very strong. So we're coming into a period with good earnings momentum, we think. The last 12 months we've also seen some good dividend increases by companies. As companies focus on cost out,
Yep.
We're seeing some good dividend increases there too. But as we kind of look around the different sectors of the market, we expect resources will be very strong. The last 6 months of 2017, commodity prices were very good, so expect some of the earnings to come through there.
So dividend increases from BHP Rio potentially?
Yeah, we think so. It's more volatile now, the BHP and Rio dividends. The progressive dividend policy is gone,
Yeah.
but given it's been a good period, we expect a good uplift there. The oil price has recovered a lot as well. Like a lot of these Australian oil companies have been preparing their businesses for $50 oil, and we're now closer to $70, so they should do well also. In terms of the banks, the banks have got some challenges politically,
Yep.
but the CBA result will be out next week. That'll be first, and that's since last October. It's the first chance to see how the banks are tracking. But that last reporting season for the banks, bad debts were very benign, which helped earnings. So we expect some good, at least maintaining or low growth in dividends from the banks. The consumer sector has been interesting. This time last year, we started talking about the threat of Amazon, and a lot of consumer stocks got hammered. But we've seen that that's probably going to take a little bit longer to play out. So a lot of the more focused retailers, not so much the department stores, but we think they'll continue to do quite well. And then finally the telcos, that's probably been the toughest part of the market. That's certainly lagged the market over the last 12 months. The NBN is making a drag on earnings. So Telstra will cut its dividend from what we saw this time last year, but that's been well flagged.
Okay. So let's focus on the banks, very important part of the market for our investors. So two questions. As we were preparing for this interview, you mentioned you had a relative underweight on ANZ
Yes.
compared to the other three majors. Why that disconnect? And secondly, CBA just appointed a new chief executive. Thoughts, any implications of that choice on your shareholdings or view of the company?
Yeah, sure. Firstly, on the banks as a whole, as you know, the banks are a big part of the Australian market. With their yield-focused portfolio like BKI, it's a very important part of our portfolio also. So we have 28% of our portfolio in the big four banks, but we get almost 40% of our income from that 28% holding. So it allows us to then invest in some high growth stocks that the yields aren't quite as good. As you said, in terms of our positioning, CBA, NAB and Westpac are our biggest position. We've got about 9% in each of those. NAB is actually our biggest position. We like the stability of those companies now in terms of the capital position, and we think the growth, albeit low going forward, is still going to be quite solid.
Okay.
The Royal Commission will be a distraction, and it will be expensive, but the underlying businesses are in good shape. ANZ we do own also, but we own about 4% of the portfolio in ANZ. That's not a new position in terms of the relative weighting between the other three. The reason it's a smaller position is a number of reasons, in fact. We've never been big believers in the Asian growth strategy from a number of years ago, and that's proved to be the right call from our perspective.
Yep.
The other thing is ANZ doesn't really have very many franking credits on their balance sheet, so
Right.
all our shareholders of BKI, of which there are 15,000, can value those franking credits and use them. So
Very important to pension
and so
investors especially, isn't it?
exactly right. So as ANZ starts to sell some assets, the ability to get a increased franked dividend is lower than what we can see.
So
from
is
the
there a
other
risk
three.
to the franked credit?
It's just a risk of the way they might return capital to shareholders, might be a buyback rather than a dividend, and we certainly prefer the dividend route.
Yeah. Okay.
So that's the main reason why there's the disconnect. And then finally on CBA, as you say, this week's been important for them with the announcement of Matt Comyn as the new CEO going forward. We've met Matt a number of times. We think he's very capable. He's run the biggest part of that business. I think there were pros and cons of internal versus external, but we think he'll do a good job over a long period of time.
Okay. And lastly, there's a couple of stock stories you mentioned that you're excited about: New Hope, ARB, and Lindsay Corporation. Names that don't immediately pop out as companies with juicy dividends in the context of a dividend-oriented portfolio. So why do you like these stocks, and what are you looking for them during earnings season?
Yeah, I thought we'd talk about those because they are a little bit different.
Yeah.
Some of your viewers might not be too familiar with them. BKI is generally tilted towards the bigger stocks. I mentioned the banks, but a number of the financials as well. So, and that's often where the yield is. But these three companies we think are well placed for the future. So New Hope to start with is a coal business, Australian based in Queensland and New South Wales, but run by a very capable management team and board, very sensible, has no debt. This time 2 years ago, it actually had $1 billion in cash when the coal market tanked and was able to buy 40% of the Bengalla mine in New South Wales, which has been a wonderfully timed acquisition. So coal, as you know, is sometimes portrayed negatively in the press, but offshore, even domestically, but offshore in particular, the growth of coal is going to be significant.
Right.
And New Hope this year will export probably 8.5 million tonnes of coal. Coal prices, thermal coal prices have been very strong, and those end markets, particularly in Southeast Asia, will continue to demand coal. So it's a very well-run business. Over the time, despite the fact it isn't naturally a high yield stock, it has paid a lot of special dividends to BKI, which has been great.
And is that something you're looking for?
It's a welcome. We don't buy some expecting a special dividend all the time, but we know with a balance sheet in a good position and good earnings, commodities can be volatile, and if there isn't a better use for the capital, well, we'd hope that dividends do come back to us. So on the other two, Lindsay Australia is a very small business. It's a transport and logistics business. It's only got a $125 million market cap, but the growth prospects going forward are very good. It's still run by its founding family. Now, we like it when there's alignment between management and shareholders, so they've got a lot of their wealth tied up in the business. So trucking is a difficult business, but they position themselves very well to be aligned with the farmer and the grower and also the port. So there's a lot of export growth coming forward. They've invested very heavily in warehousing, cold storage, and the trucks themselves. So the growth, again, using Australia as the food bowl, and we hear a bit of that, is a good way to access that part of the market to, again, target Southeast Asia, let alone domestically. So that's another good business we like, and we see the growth trajectory taking off there. And then finally, ARB Corporation is this is a really high quality business, we think. So ARB, for the four-wheel drive enthusiast among your viewers, will be more than familiar with them. And as we get an ageing population, they're spending a lot more money on those kind of trips. But ARB is a high quality business, again managed still by the founders. It's increased its dividend every year for a number of years. It was never cut, at least.
Wow.
They paid a special dividend a couple of years ago. Based in Australia, but has operations globally and some manufacturing in Thailand as well as in Australia. But the growth prospects for this part of the market are very good, and we've been out and visited the companies, seen the facilities, been to trade shows, and just the quality of their product compared to its peers is far superior, and that will continue. Another business with a good balance sheet, good management team, and attractive dividend stream.
Okay, so from an earnings season perspective, dividend growth being the key theme there among these companies you just highlighted. Yeah,
absolutely.
Great.
And again, good management teams as well. We like that, and if we can get good yield out of it over a long period of time, our BKI shareholders will do well.
Okay, Will, thank you so much for coming in and sharing these insights.
Yeah, thanks for having me.
I hope you enjoyed this video. Please remember, before acting on any strategies or trading ideas, do your research, consider seeking financial advice. Otherwise, good luck during earnings season. I hope you make a lot of money. Best of luck. My name is Vishal Tekshanani, and I'll see you next time.